What's going on, everybody? Welcome back to yet another video. So in today's video, I'm going to be showing you guys two trading indicators that you need to start using ASAP. I'm going to give you guys a full breakdown on these two indicators and how to use them together. But real quick, as always, if you guys do find value in this video, make sure to smash that like button as well as clicking that subscribe and that bell icon. It would mean the absolute world to me. But without further ado, let's hop into the video. So before I show you guys the two indicators that you need to start using, in case you guys did not know, I do have a 450-page book on Amazon titled The New Age of Technical Analysis. And in this book, I go over my entire day trading and swing trading strategy, all the indicators I use, plus much more. So if you guys do want to check that out, make sure to check out the link down in the description or search it up on Amazon, The New Age of Technical Analysis. Alrighty, so the two indicators that you need to start using ASAP. The very first indicator is going to be the 21 EMA. Now, why is this moving average so important? Well, if you break it down to basic trading psychology, a lot of traders and indicators use a variation of either the 21 EMA, the 21 SMA, the 20 EMA, and the 20 SMA. I know a lot of traders either use the 20 EMA or the 21 EMA. Honestly, there's a lot of debates on which one is better, but in reality, there's pennies of a difference between the 20 EMA and the 21 EMA. The reason why I use the 21 EMA is due to something known as Fibonacci. So if you guys do read my book, the actual EMAs that I use on my other monitor is the 8, 21, 34, 55, and 89 EMA. They all come from Fibonacci. So that's the reason why I use the 21 EMA. I think the 20 EMA has something to do with time cycles. I'm not exactly sure how that came into play. But again, a lot of people use either the 20 or the 21. And there's also trading indicators like the Keltner channels and the Bollinger Bands that use a different variation. I think the Keltner channels use the 20 EMA and the Bollinger Bands, I believe, uses a 20 SMA. I don't use the Bollinger Bands, but I'm pretty sure on that one. So now, how do we actually use the 21 EMA in our trading? So depending on the time frame that you select, and again, everybody trades off a different time frame, whether it be the 1 hour, or maybe you're a swing trader and you use the daily, maybe you're a long-term trader and you use the weekly, whatever it may be. The way that I'm using the 21 EMA is if price is below the 21 EMA, ideally I'm looking for puts. So if we're looking at QQQ, it's below the 21 EMA. What happens? It downtrends. Now, if it's above the 21 EMA, ideally I'm looking for calls. So ideally I'm bullish. As we can see, QQQ continues to go up in price. Maybe you're a 1 hour trader and you like to use a 1 hour time frame. Well, if price continues to hold above the 21 EMA, ideally you're looking for calls. If price continues to hold below the 21 EMA, ideally you're looking for puts. So when it comes to the 21 EMA, I'm just looking at price and where it is, whether it be on the upside or the downside of the 21 EMA. And that's how I'm understanding, okay, am I ideally bullish for the day or am I ideally bearish? Now, you also got to keep in mind that just because it's above the 21 EMA doesn't mean I'm only looking for calls, because there could be a nice reject spot. Maybe it's a Fibonacci retracement, maybe a super strong resistance point, or maybe we're coming down to a very strong bounce point, whether it be support or again, a Fibonacci retracement. So it really depends, but ideally the way that I am using this indicator is if price is above, ideally I'm bullish. If price is below, ideally I am bearish. Now, also with the 21 EMA, it also acts as a very strong area of support or resistance, again, depending on the time frame that you select. So let's just say that you're a longer term trader and you're looking at the weekly time frame of QQQ last year. Well, notice what happened every time QQQ came back to the weekly 21 EMA. It found support here, support all through here, support here, support here, support here. But notice what happened once it fell below the weekly 21 EMA. Came back, pretty much rejected it here, rejected it here, rejected it here, dropped. We eventually broke above it, became support, fell back down below, rejection all through here, tried to break above, ultimately couldn't hold. So we are still trading below the weekly 21 EMA. Therefore, my overall view on the market is still ideally bearish. So you can see how using this basic moving average right here helps you understand overall market sentiment, especially if you use it on the higher time frames, because that lets you know the overall sentiment in the market. But if you're going to be a day trader, you can use smaller time frames, 5 minute, 10 minute, 15 minute. But just remember, again, when it's below the 21, ideally I'm looking for puts. When it's above, ideally I'm looking for calls. Now, this other indicator that you can use when you piece it together with the 21 EMA, it gives you a very, very good understanding on where the stock price is going to go. Now, I do have videos on this trading indicator and I do talk about it in my book, But the other indicator that we're going to be talking about is going to be the TTM squeeze. Now, on ThinkorSwim, there is a free version of the TTM squeeze. The only thing is you're only going to get the green dots and you're only going to get the red dots. What I use is the TTM Squeeze Pro. If you guys do want to check it out, the link will be down in the description for that. But what you can see here is I have green dots, black dots, red dots, and occasionally there is an orange dot. Now, what the orange dots are telling you is like, really pay attention to price, and I'll break everything down here in a minute. But with the TTM Squeeze Pro, as you can see, there's 4 different colors on this histogram bar right here. We have light blue momentum, dark blue momentum, red momentum, and yellow momentum. What light blue momentum is telling us is that there's very strong buying momentum. So as these bars grow, the stronger the buying momentum becomes, the more buyers are coming into the market. So now if you piece that together with the 21 EMA, well, okay, price is trading above the 21 EMA with light blue momentum, which is signaling that there is strong buying momentum. So as a result, we should more than likely see a continuation to the upside. And as you can see, those bars grew, more buyers were coming in. We continue to hold above the 21 EMA. And as a result, QQQ continued going up in price. Now, after the light blue momentum, there is dark blue, and dark blue is just kind of telling you that the buying momentum's dying down. So as you can see, as soon as we start getting a smaller bar, that's when we start to get the dark blue momentum. Now, dark blue doesn't necessarily mean that sellers are coming into the market. Again, just buyers are dying down. But what really differentiates the dark blue bar is if we're holding above that 21 EMA. So as we can see right here on QQQ, it was still above the 21 EMA with the dark blue bar. But what signaled the reversal was as soon as QQQ started breaking below that 21 EMA and the dark blue bars continued to shrink. That's what's telling you that, okay, more than likely sellers are going to come in and this is going to flip bearish, which then takes you into red. But before we get into red, yeah, sometimes we can get dark blue, but as long as we continue to hold above that 21 EMA, again, time frames differentiate depending on what time frame you use as a trader. But if we continue to hold above the 21 EMA with dark blue momentum, there's been a few swing trades I took based off of dark blue momentum. But if it continues to hold above the 21 EMA, it's more than likely going to go into light blue. And then again, if we continue to hold above that moving average, we should see the continuation. But remember, when price breaks below that 21 EMA, that's when dark blue can flip into red. Now, what red is telling us is that there's very strong selling momentum. So again, the bigger the bars grow to the downside, the more selling momentum there is. So again, just like the light blue, however, flipped upside down pretty much, if price is trading below the 21 EMA and there's red momentum, this helps us understand, okay, more than likely price is going to continue to go down. Doesn't matter what time frame you're choosing, just whatever time frame you notice the setup. But even on a 1 hour, as we see, 1 hour below the 21 EMA, red momentum, what happens? QQQ drops. 1 hour, price breaks above the 21 EMA, light blue momentum. What happens? We have a nice continuation to the upside. So again, you piece together the color of the TTM squeeze momentum plus its price above or below that 21 EMA. It helps you understand the overall market sentiment and where price is going to go. Now, the last colored bar is going to be the yellow momentum. Yellow is just telling you that buyers are coming back into the market. But again, if price is below the moving averages and we get that yellow momentum, it doesn't necessarily mean that we're going to flip into bullish. It only flips once we start breaking above that 21 and actually holding above that 21. So if we go to, I don't know, maybe QQQ on the daily, you can see a few times we did get that yellow momentum, but look at price, it continued to go down. Why did that happen? Well, because price was below the 21 EMA. It's not until price gets above that 21 EMA and actually holds above that 21 EMA is when we could possibly see this thing flip into light blue. And if we continue to hold above, light blue is going to continue and we should see a nice continuation to the upside. So that's how you piece together these two indicators and how I personally use them. Again, if you guys do want to see more videos on how I use the TTM squeeze, I have a bunch of them on my channel going into a full breakdown on how I use the dots compared with the color of the momentum, on how I use the color of the dots pieced together with the color of the momentum, pieced together with the moving averages, which gives you a very, very good understanding on where the market is going to go next. So if you guys do want to check out those videos, I will be leaving some of them down in the description. And again, I do talk about it in my trading book, The New Age of Technical Analysis. But as always, if you guys did find value in this video, make sure to smash that like button as well as clicking that subscribe and that bell icon. It would mean the absolute world to me. Everybody have an amazing rest of your day, and I'll see you guys in the next video.